Hey everyone, it's Nick with Us vs. Herd. Thanks for watching. Thanks for joining. If you've been waiting in the lobby, thanks so much. Glad you're here. If it's your first time here, hit the subscribe button. We just passed over 4,000 subscribers just a couple of days ago. If you're not yet a member of our free options trading group, hit the link below. It's free. We go live 30 minutes after market close. If you want to get notifications for when we go live or when we post videos, hit the bell. Let's do this. Let's get it today. If you're here right now, say what up. If it's your first time here, say what up. Definitely want to meet you. Just getting going here. I think so far I see FC, Linda, JC, Tobin, Richard. Richard, again, thank you for the $20, man. I really appreciate it. Carmine was here, or is here. Eric, what's going on? Keith, glad you guys join me day in, day out. Really appreciate it. Glad you guys are here. Leo, man, what's going on? Glad you're here. Glad you're joining in today. Elvis, how you doing? Nice to see some new faces in here. Yeah, what's going on? Man, this week was pretty crazy. Before I get into things, want to say we did launch a Discord today. Today was the day. If you're interested in that, hit the link below. If you're not interested in that, that's fine. We also have our Facebook options trading group as well. But if you want to hop on Discord, it's very basic right now. The Discord's very basic. We're just getting started in there. I just have one room. Going to be putting a room in there, a lobby for like my trades, a chat in there for my trades, and then other things as well. So we're gonna be building it out. We're gonna be making some changes. We're gonna get it. Jeff, what's going on? Tom, Bob. So are we the only survivors of the day? Man, this was a tough trade. This was a tough trading week. I think for a lot of people. Clint, hit below if you guys are anti-Facebook. We got the spot for you. Greg, what's going on? Yeah, man. So, yeah, this week was definitely not, I would say, not predictable. As you can see, the S&Ps this week we hit a high of 2708, a low of 2583, and today we closed at 25.99 and 95 cents. Richard, get on our Discord, man. Aisha, how you doing? Carmen, man, everyone's coming out on Friday. Everyone's coming out on Friday. Glad everyone's here. And get me hyped. Got me hyped here today. Jordan, green, then I got greedy. Yeah, I mean, greed. You surrender profits to greed. That's why I left a lot, and I still have this cough. I was gonna say something else, but I decided not to. Got to keep it PG-13 in here. I didn't place any trades today. Only lost money this week. Carmen's day off, so she can join. Well, glad you're here. Yeah, Discord is just like a chat group. I'm not really sure how to explain it. It's kind of like Skype, but not Skype. So it's like a chat box where it's like a chat where, as a community, we can chat back and forth. You can set different notifications if you want to get notified. Like when I post a trade idea, you can do that. I also post the trades on Facebook as well. So if you're on Facebook, I also post my trades on Facebook. But if that's getting too confusing, we have Discord. So you can go to discord.com, or you just use the link. Just use the link below, and you can download the app. They have one on your phone. They have it on your desktop. You could download the app and sign up for an account and join it. The link below will get you directly into our group. There's no passwords. There's no anything. You could just, it goes right into our group. I will be building it out, but as for right now, we just have the one group. So yeah, Facebook's glitching up on me. Samuel, say hi from Disneyland. Yeah, it's like Slack. It's just a messaging service. It's a way to bring communities together. So if you're interested, I got the link below. Today S&P's down 47, Dow's down 491, NASDAQ down 161. So, we pretty much headed down all day today if you take a look here. Gap down and any pop was just sold off. Pretty much the stairs down. Nothing. However, there was no panic. As you can see here, there was no panic. It was a very controlled way down, like very controlled. However, we did close right below 2,600, so there's that. And as I was saying before, Baron, what's going on? As I was saying before, like if we go into the S&Ps right here, before I get into my trades, I just want to tell you guys, let's get what I've been saying. If we're starting to close below this 2,600, where we've been bouncing around all year, so we've been bouncing back up, except for this, all the way down to 25.32. We've pretty much been bouncing right at 2,600 all year. As you can see, we're pretty much just been, yes, we fell below it. We fell below it a couple days ago too. Came back up above 2,600. But if we're consistently closing below 2,600, as you can see, just want to point this out. We're definitely in a danger zone here. Like, if you look at this right here from about 2,400, 2,450 is like the next level support. This like ramp up here from 2,450 all the way up to 2,600 was a non-stop. We just went up every day in 2017, in the fall of 2017, September, October, November. We just went up every single day, and this is what I was talking about. Like, a lot of you guys weren't here. I wasn't live streaming that. I started live streaming in the summer of 2017, but really nobody was watching. Nobody really watched me until recently. So definitely appreciate it. Steve, what's going on? Kit, what's up? But what I was saying is, you can't go up every day and not expect it to come back down. And now, it didn't come back down. We went all the way from 2,450 all the way to 2,900. And as you can see now we're starting to pay for those. We're starting to pay for those consequences now. If you go up every day and people are getting so greedy, they're like, oh man, we're just making money hand over fist. I mean, my 401k is getting, we're getting fat. And now in 2018, you can see what happens when the S&Ps go up like over 30% a year. This is what happens. This is what happens. Buy the dip is not working. Investor confidence is lower. They're not willing to any dips. They're not willing to buy into. Any pops. As you can see, the pops are getting sold because people are trying to exit. Do you see how many people are trapped up here right now? Any pops, like popped up to 2,800 once here, got sold off. Popped up again, 2,800, sold off. Popped up again, 2,800, sold off. Those people are trapped. Andrew, what's up? We ended up hitting our mark. We did. I was actually hoping we weren't going to do that. I mean, I don't like to see the market go down. I don't like to see the stock market go down because it hurts a lot of people. People get laid off, 401ks get damaged. I don't like to see that, but at the same time, you have to understand that we can't go up every day. We can't go up every day. We just can't. And we went up it felt like in 2017, it really felt like we went up every single day. And now that we're not, people are thinking the world is falling apart. But if you look, we're pretty far off from where we started. If you look at 2017 as a whole, I'm not saying it's going to go all the way back there, give all the gains back, but when we started 2017, we're at 2,200. We went all the way up to 2,700 in 17, and then we had that one last push all the way up to almost 2,900, like 2,875, 2,876, you know. But when we have charts like this, if you have charts like this right here, you know, this is not normal. This is not normal. So I call those bag holders. Yeah. I mean, you don't want to be the one holding the bag. And when those pops come, they get sold off because they're saying, you know, people sentiment is saying like, okay, it's moved up quite a bit. It's moved up quite a bit. And it's moved up quite a bit. If this is the most I can get back for it, I'm willing to do that. I'll still sell at a loss, but it wasn't as bad as it was before. And that's why they're selling those pops. Bought some calls for a potential gap up on Monday. I agree. It sucks for the regular guys not trading. Yeah. Dow didn't get to nearly 27,000 overnight. Yeah, I mean, if we're looking at Dow here, I mean, just ridiculous. I mean, pretty much the same chart, but I mean, 2017, we had 2017 just had one bad month. You know, 2017 just had one bad month, and it wasn't even really that bad. I mean, it floated between 1,000 points, not that big, or not even like 500 points. Yeah, it was floating between 500 points. We just cut down 500 points today, just to give you some context. You know, we just cut 500 points in one day. So, just to give you context how that went, and just to give you some background. Man, can't shake this cough. I'm sure it's really annoying for you guys. Okay, so let's go into some of the trades here. Today I didn't do. Let's make myself a little smaller. Now some people are getting confused. I've been notified that some people are getting confused by my P&L open and P&L day. So let me just break this down real quick for you guys. P&L day means how much money I made or lost on today only. Today only. Okay. P&L open means how much money I'm up or down on my positions since I opened them. So whether I opened them a month ago, yesterday, a week ago, or even opened them today, it counts that in here. So M1 Gunner, what's going on? When I close a position, the P&L open that gets zeroed out. So if I were to close out this GE here today, you can check out my videos from yesterday. I didn't actually I did close one trade today, but I still had the call, so that's why it's showing a loss here. I'll go over that trade in a minute. But if I close out GE here, it says $2 open. You see I lost $8 on the day, but it's $2 open. That's what the difference is. So I'm still just because I lost $8 on the day, I'm still up on it. I'm still up $2 on this position overall since I opened the position. However, if I close this position today, the P&L open would be 0, affecting my bottom line here, but my P&L day would still have been the same. Still, it would have been $8. So, you know, just to give you guys some context on how that works. So, like this IBM trade in here is negatively impacting my P&L open because I've had this open for a long time, and I know that this is max loss. Like, I'm not going to do anything about it. I'm just going to leave it on because maybe we'll get maybe IBM will get a huge bounce by next week. But at the same time, like, this doesn't mean, you know, I lost 268 on the day or anything like this. This just means I lost 268 since I put this trade on. Since I put this trade on November 6th, we've already made back this 268 and then some. I mean, if you go back to, like, just give you some context here on IBM. Matthew, what's going on? You know, just to give you some context, you know, if I go on to, you know, this was, oh, we can even go back further. You know, this doesn't show, like, that shows, like, this shows the trade that I'm down 268 on, but it's not showing this trade that I made $70 on, and it doesn't show my other trades that I used to balance this out either. So, just to give you some context on what that means, the difference between P&L open, P&L day. So that's why I pay more attention to how much I'm up or down on the day versus P&L open, because as soon as I close out, as soon as I take profits, that gets zeroed out, and then my P&L open is this is most likely going to be at a loss, because when I close out my winners, I'm leaving my losers. So that's why that's like that. So if you're not sure how the Thinkorswim platform works, that was a little quick tutorial. Loyalty, what's going on? I'm a new subscriber and new options. Haven't done any trading yet, just observing. Welcome to the fam. Welcome to the UVH fam. You don't need much of a bounce with that average down. Yeah, but IBM. I mean, I'll trade IBM, but I don't think I'm going to make the money back on this trade like I did on this. I mean, I did a nice strangle here, made about $67 here. That's probably how I'm going to get. That's probably how. But I don't think. I think this one's a goner. My goal was for it to bounce at 135. I averaged it down a couple times here. I only averaged it down once. I said if I don't hit my average here, so on 12.7 I averaged down. If it doesn't go my way, I'm gonna trade something else. And then I traded something else here. I traded this here. Got $70 back. I'm still down. I'll still be down like 300 on it, but I have a lot of other trades that are working for me that I've already taken off. So Adobe and cost puts were good for me. Nice. People got paid. So let's go through the trades today. Today, as you can see, not a whole lot done. I closed one trade, left, and I bought 3. Kit, thank you, man. Thank you for the $2. Appreciate it. But to give you some context, on this Microsoft trade, we're gonna have to go back a couple days, because this trade, it's saying here, I'm up $78. I have a 13 realized profit, but I'm down $56 on open. So it gets confusing for people. So let me go through the orders to give you some context on this Microsoft trade here. Okay. So on 12/11, what day was 12/11? Okay, Tuesday. Tuesday, 12/11 on Tuesday, I put on this Microsoft trade for $1.36 it cost me. I bought the 108 put and the 112 call expiring for this week. As you know, Microsoft fluctuated a lot in the last couple days. We went all the way down to 107 up to almost 112. Matthew, thank you so much for the $10, man. Appreciate it. Man, you guys are raining down the blessings today. Thank you. Richard, Kit, Matthew, man, you guys, I can't thank you enough. This channel blows my mind. So I let that chill there. Microsoft, let's get Microsoft going. Okay, I have Microsoft going in the bottom right here. So I put this on Tuesday. We came down. It went all the way down to 107.50. We then gapped up to 111.27, which then was causing me some trouble because I had the 112 call and I had the 108 put. So it would have been way easier money if it went to 107.50, it went up, and then we gapped down back to like 107. Would have been in, would have been out, would have been nice, but that didn't happen. We instead gapped up. And then yesterday was kind of, we went, we didn't really gap up. We pretty much opened flat, and it was just like a theta burning type of day where it just moved sideways. Yes, we had that push up to 111, almost to 111, and then it came back down and really just chilled here yesterday. And since that trade, since I had BABA, I let this trade run because I took profits on my BABA trade yesterday. So I let this trade run. I didn't have a lot more. I mean, most of it was lost. So what I did was I then bought the 108 put yesterday. So I bought the 108 put yesterday for today expiration. And now for people that are joining us that are new and people that are beginner traders, I definitely don't recommend, like if it's your first time trading or new trading, I definitely don't recommend trading options on expiration day unless you really know what you're doing, because there's a lot of factors that could really screw you. I mean, theta really accelerates, and you can be at max loss almost instantly. But all I had left in the trade was like $10, so I bought another 108 put. So that way, if it did gap down lower, if I did gap yesterday, the scenario was if I did gap down lower, I would make money faster. And my risk on the table was $60. So for $60, it was definitely worth the risk to, see if I could make that happen. And we did make that happen this morning on Microsoft. So this morning, Microsoft, as soon as it broke 108, I was feeling pretty good about myself. As soon as it broke 108, I sold it right at open today at 8:37. So 7 minutes into open, it was like 107.80, I believe. I sold it off. Felt pretty good. Instead of Microsoft yesterday was a $120 loser. And today I got $80 back. So I'm realistically going to be down $40 on this. Because I had $13 profit on the puts, and then my call expired at 56, so I'm down $43. So instead of a $120 loss, I got $80 back almost, and I'll take a $43 loss on it. So we recovered some funds there. However, Microsoft, as you can see, I was feeling pretty good about myself when it was up here, but then it left a lot of profits on the table. And if you look at Microsoft, those 108 calls, so the 108 puts. The 108 puts at close for the last price was 212. I saw them go as high as 212.70. We can see how high they went today, actually. Okay, not 212.70. So it was like 225. So when I sold them, they were around 73 cents I got for it. So I sold it on this bar right up here. They came back down to 50 cents, and then they just exploded right at close. And the one thing that you have to be careful about is, like, this was a very risky trade. If I didn't take profits and this settled in back at 109, went to 110 maybe, or just sat at 109, or even sat at 108.50, or even just sat at 108. If it just sat at 108 the rest of the day, I would have lost all that money. So in terms of risk, I did the right thing, taking that trade off, being disciplined, getting back as much money from that losing trade as I could. I got back almost $80. I lost 43 still, but I didn't lose over $100 on it, so I felt pretty good. You can't play the game on Friday when options are expiring, and on the day that you're trading them. You can't play. That's playing with fire. This could, as you guys know, like if you're looking at a chart like Baba here, let's say it came down and it ripped back up. You instantly lose on Fridays that are expiring. So that's why I was very careful. With it. That's why I didn't hold on for bigger gains. That's why I was playing safe. I was like, okay, this is how much I'm going to squeeze out of it. Felt pretty good because, as you can see, it went from 107.68 all the way up to 109.25. Would have been more negative on the trade, would have given up a lot of gains, and then I would have had to been patient for it to really come down to like the 105 area, the 106 area to make the real money. So we left for $400 on the table or $350 on the table, but I don't feel bad. I don't feel bad about it. Sometimes the market just doesn't work the way you want it to, and you gotta take what you can when you have it. And you have to analyze your risk. Are you willing to lose money? And I really wasn't. Trading is a business. Your account is a business. It's not a savings account. It's a business. So you either make money or you lose money. And when you know that you had a losing position, you're most likely going to lose. You try to get back to break even, or as close to break even as possible. And that's really why I took it off, because I was as close to break even as I felt I was going to get, and the closer it is to 3 or 4 p.m. Eastern time, the closer you get to close, if it stayed flat, it would have burned all that premium up. Would have been terrible. So you can't predict the future. Definitely did the right thing there. And then yesterday, Baba took some profits off yesterday. It finally did what I wanted to do, but it was a day too late. So sometimes you just don't get the timing right, and that's okay. Then to walk you through some of my other trades here, I did Starbucks, I did an Under Armour, and then I did AMD here. So Starbucks, what I liked about this trade here. Let's fix the chart here. Okay, what I liked about this when I put the position on it was a bearish strangle. I have the 65 put and the 67 call. I put it on for $1.02 debit. And really what happened here was when I put the position on, it was like 65.20, and it looked like, you know, there's not a whole lot going on up here. Looked like I could easily get down to 62 or even 60, so I was pretty bearish on it. I know that they had some news and stuff about Uber Eats, but I don't really think that really mattered too much. And as you can see this morning, it gapped down a lot, and it hit 63.50. Came back up to 65.86, and then I put the trade on right at 9.47. So I put the trade on right in here, these two green bars right here. So it was somewhere between $65 and $65.15. So I bought the 65 put and the 67 call. 67 being resistance up here. If it does go back up to 67, you know, I'll lose a little bit, maybe even break even. But my main goal was for it to break below 65, and it went down to 64.50, and then it kind of came back at close. So, you know, we'll see what happens with that. Under Armour, I made some money on that yesterday, I believe, or the day before. Under Armour, I put on a bullish strangle to offset my bearish strangle on Starbucks. And if you guys haven't seen the chart on Under Armour, you know, what I was looking at right here in Under Armour was that it bounced today at 1820 or 1830, right around there, and that's where it's bounced in the past. Here, there's some support back in here, so I put on a bullish strangle, hoping we can come back up to maybe like 20.5, 21. And so on that one, I bought the 18.5 put, 19.5 call. At the time, it was, you know, it really didn't do a whole lot. At the time, we were trading at, let's see, 10.05. We were trading at like 19.20. So I was leaning more bullish on it. See if we can return back up to the 20.5 mark or 21 mark. But we just kind of churned sideways down about 20 cents from when I bought it. So on that position, you know, I'm down $7 on it just because of the sideways movement. And that's a good example to show you what sideways movement does in terms of your options. It really deflates the option, and you know, I put it on for 78 cents. I'm down 7, so I'm down 10% almost. So because of that flat movement here, I'm down 10% just because it didn't move. So that's why you play defense. You should realistically make a new target goals, treat it as basically a new trade entirely. Exactly. Andrew, I think we are likely going to consolidate in a tighter range for the rest of December unless something insane happens. I feel like something brewing, Andrew. AMD, I haven't put a trade on AMD in a while. What I liked about AMD today, Andrew, I got you. I knew who you were because you said we hit that target. We've been talking about the 2600 mark all day. What I liked about AMD, I bought the 19.5 put and the 20.5 call for $1.07. What I liked about that was it was hitting below 20, and I felt like it could break down, easily revisit about 17.50 or even 16 if we get some momentum. And it ripped up, it gapped down, but then we ripped up at open. Okay, yeah, we ripped up at open, and then we kind of came back down. So I put the position on at 1:42 p.m. So it was, let's see. It was right in here, right when it was breaking below 20. So it was like 1990-ish area where I put that trade on because I thought we were going to break down lower. Yes, it didn't. There was no strength here. But right now under 20 is looking bearish to me. So that's why I put the trade on. And as you can see, this is pretty messy all week. I mean, it went from 21 down to 18, back up to 21, and now we're revisiting. So hopefully we can revisit the lows here of 1880 range. So overall today, I'm down $20 per account today. I had a green week. It was a pretty good week, but for me, it was a pretty slow week. I mean, we had some good trades on Stitch Fix. We had some good trades on Microsoft early on the week. We had some good trades, but we did lose a little bit on Microsoft today. That was all that was expiring today. The rest will ride. And then today, what really hurt as well was oil. USO's down. We lost $42 there, and then it said IBM says we lost $40, even though I feel like we were at max loss already. But sometimes that's how it calculates. So really, these other positions really didn't really hurt us today that I put on. Starbucks didn't hurt us. Stitch Fix were flat. Under Armour were down 7. GE were down 12. AMD were down 3. So next week I think we're set up really great for next week here. King Jacob, favorite stocks at the moment. I don't really have a favorite stock. I mean, I've been pretty successful with Microsoft. Baba was a big winner for me, and I recently haven't been trading it as much because they've finally figured out the option pricing and how to outprice me. So I've been doing small trades in there, and then I did a trade on Baba that I took off yesterday, but it was a real struggle to get off with a profit. I mean, yesterday. Baba, we barely got out alive this week. If you're looking at, I mean, $1.58. I got out for $2.17. Barely got out, and I got out yesterday. Wasn't the safest trade, and they definitely made me work for it. But we got out with a small profit. If I still held on today, it would have been a way bigger profit, but also I don't like holding on to expiration day. And I took this one off and I left Microsoft, so that was kind of, I was profitable on this, not on Microsoft, so I figured I'd let Microsoft run and I would take Baba's profit. So most of the week was just a brutal theta killer, I agree. Worried about taking on credit spreads with gaps lately. Yeah, I mean, so I used to do a lot of, in 2017, I used to do a lot of credit spreads. And then I was telling you guys a couple weeks ago, I did it and it was a pain. I did a credit spread. I did an Iron Condor and SPX. I barely got out alive. I was playing defense. Like I had to play aggressive defense. I only got out with a $50 profit. I was glad I didn't lose any money, but the amount of work that went in to get that $50 was definitely not worth it. Definitely not worth it. King Jacob, I don't know if you were here for my analysis on SPX, but my analysis is if we're consistently closing below 2,600, we're gonna visit 2,400 very easily, 2,300 to 2,400 range. So that means red. Yes. So enough about me, guys. What are you guys thinking? Costco. You guys were trading Costco, Johnson & Johnson. I didn't do any day trades today because I was working on content and I was working on, the thing is, I don't like to get super aggressive on Fridays, mainly because after a long week of trading, I kind of like to just kind of coast it out, take it easy. Yeah, there was a lot of profits left on the table. I was looking at Johnson & Johnson when it was down like 4%. I didn't think it was going to tank a whole like 10% here. Steve, see you later. Have a good one. And then Costco was another one. Like if you're looking at Johnson & Johnson, they had that news article about the asbestos in the baby powder. I mean, it's terrible. That's terrible. But as you can see, these puts were up 24,000%. 24,000%, 3,900 for far out. We got the 20. Yeah, that is 27,000. Okay, sorry, it's hard to read. It's that many zeros just to make sure it's correct. 10,000%. So it was kind of all over the place. So would have been a awesome day trade, very easy day trade, but I thought it was done, but it kept going and then it stopped eventually. So. And then also, I know a lot of people in our option trade group made money on day trading Costco as well. I do like to trade after earnings. I just really didn't like the whole Friday setup, but looks like that would have paid out pretty nicely as well. Costco, as you can see on Costco, there's really no support until like 195 to 200 range. What industry are you hitting? I feel like the capital held on for margin on them is not worth it. What do you mean? Are you talking about my Iron Condor and SPX? I didn't think that J&J News was heavy, so I figured it was worth rolling the dice. So, Dorian, what's going on? The one thing I would say about the Johnson & Johnson news, now they were saying, CNBC is saying that Johnson & Johnson knew this for decades. This is not going, for me, I don't think it's going to impact, the bottom line immediately. But since Johnson & Johnson was not honest with people are going to start banning them and not trust their products. So a year from now, I think Johnson & Johnson is going to be in trouble. But next quarter they should be okay. People are going to boycott it and stuff like that because they're not going to want to trust Johnson & Johnson. But immediately, I thought that was like a lot for the stock to go down. But as you can see, it's not even at yearly lows. It was riding at it was touching all-time highs a couple days ago. So we'll see what happens. There's definitely next week. Definitely keeping an eye on Costco and Johnson & Johnson. See if we can play some trades next week. Definitely we're movers today. Just because you missed out on the opportunity today doesn't mean there's not going to be another opportunity in that stock tomorrow or Monday, Tuesday, Wednesday. There's opportunities every day. Just because you lose opportunity like today, I'm really casual about not being in those trades because I know for a fact I'll be able to trade those stocks in the future if there's a trade there that I like. So, when you to be a disciplined trader, you have to choose. You can't just get into everything because then you get in trouble. Andrew, I've been selling premium far out. Anything closer has been scary. Okay, I got you guys. I see what you guys are talking about. Yeah, the margin. When you sell premium far out, the margin gets quite intense. The max loss is intense versus how much you make. So it really depends on your risk reward. It also really depends on how much time you have to babysit. Like for me, I'm a pretty active trader, but a lot of people, have day jobs or not at their computer or not able to be on their computer or phones when they work. So it makes sense. So what else you guys trading? Greg has 11 puts. Greg has 11 puts on USO. So I have the $12 calls. We talked about this a little bit. I'm bullish on oil if we stay above 50, and we've been consolidating here. Above 50, under 50, not so bullish. I'll buy puts under 50. Above 50, I'm bullish. Nick, could you spend some time in a future session talking about day trading and price action traders? I need help when to get in and out. I ended up losing $80 on Costco today. Bob, the one thing that I will say, before you place a trade, think to yourself, what's your target? At what price do you think it'll get to, and how much do you think it'll be worth? Is that target worth 50%? Is it worth 25%? Is it worth 100%? Set those targets, and then if those go against you, what's your exit strategy? Are you willing to double down, average down? Do you want to put a trade on something else to offset the loss? Do you want to trade a different stock to offset the loss and let that one ride just in case it comes back around? You have to set specific goals before you enter the trade. Like, it's a very bad planning if you put a trade on and say, I hope to make money on it, and then you start making money on it, and then mentally you don't have an exit. You don't have an exit on where to go. You don't know which way you want, you don't know. So it's better to set a target. You hit the target, exit, take the money, redeploy. Take the money. So, take profits, redeploy. Take profits, redeploy capital. I've said this time and time again. Take profits, redeploy capital. Whether you're up 25%, 50%, 100%, 200%. When you hold options that are profitable, you're increasing risk. Got to be confident. You can always find new trades. Yes. I love the discipline. I'm on 50% target right now for buying and selling premium. Nice. FC, my standards are aligned with yours. For buying, I'm usually around 100% profit target. Shorting options, selling premium, I'm at 50%. Let's see here. What else we got? What else you guys want to talk about? We got 20 minutes on this stream. You guys got some stocks you want to drop? Things you guys are trading besides what I've talked about. I know I talked about a lot of stocks today that you guys are probably trading as well, including Johnson & Johnson. Going back to Johnson & Johnson though, you know, if we have more action on this, I mean, it's going to easily see 125 area. You know, if we see more downward action. However, it has bounced here in the past, but this was earnings induced though when it went back up. So you got to be careful. It does pay a 90-cent dividend, so there's that. But other than that, it looks terrible. Andrew, you're taking a look at EQIX. EQIX. Let's see here. What I don't like, so I talk about this a lot, is I don't like when volume is almost zero. As you can see on these guys, they only have monthly options. Volume is like non-existent, almost zero, 14, 3, 13. So not very good. I mean, I will say if you're going to trade this, you probably just want to buy some stock. It does look like it has some bullish consolidation down here. Zendesk and Salesforce. I did make some money in Salesforce a couple weeks ago, but it's still here in this like 135 area. So I've been trading it. If it comes back down to 135, I will definitely put a trade back on to CRM. But right now the range is getting tight. So we need it to bounce between 135 and 140 a little bit until that range either breaks down into like the 125 area or we break up to like the 150 area. Zendesk, I do like trading CRM. Zendesk, I am pretty knowledgeable about their product. Let's see, I don't know if they trade though. Yeah, these options don't really trade. If I was gonna pick between Zendesk and CRM, I would definitely pick CRM or Salesforce. There's no volume here. Nobody's trading these. What do you think of BAC? I was actually pretty impressed. Did BAC hold green today? They did stay green. So I have a Strangle. I still have a Strangle on BAC for 2 weeks out. I have the 24.50 put and the 25 call. So it's tight. But even though it closed green today, if you look here, this descending pattern here still looks very, very bearish. And, you know, you got to go, I think it was the 3-year chart or the 2-year chart. 2-year chart. You know, it looks like probably 22 area. It looks like it wants to revisit. Bought vertical spread and JD is struggling but not losing yet. JD had some movement yesterday, I believe, didn't they? So JD it moves slow, so and you really have to be one-sided on JD. You have to actually think it's going to go up. You can't really do strangles on JD just because of the pricing. But it does look, if we can break above 24, and definitely if it breaks above 26, could have some nice bullish momentum. Looks like it found a bottom down here, but as you can see from the 1-year chart, I mean, that doesn't say a whole lot. You know, it's just been going straight down pretty much all year. It's had some nice bounces in here. And maybe you could get a nice short-term bounce to like 30, 32. But it's still Dow trending hard. Wow, CRM with 103.92% gainer day. That was the white trade. I take that back. I didn't see how CRM did the second half of the day. Yeah, Facebook had some security news, but they were actually green most of the day, I believe. And it does look like they're trying to get back up here. I mean, definitely very bullish from after hitting 126, very bullish. I mean, I know that doesn't say much. They're still still below like where they were. Like all 2017, they traded around 170, and they're now 140, 144, 145. So it looks like it does. If it returns, it could be a nice bounce up back up to like the 170 area. And if you look at Facebook, I was actually pretty impressed today by the strength that it. Even though the market was selling off hard, this came back up until close where it got sold off into the second half of the day. But that was pretty crazy. Yeah, Facebook. I don't think it will be. It was they like leaked photos or something like that. I don't think the news was too crazy. Yeah, it wasn't like, they said that people had access to like 8 million photos or something. It wasn't like they leaked passwords or payment info or anything. So I don't think it's going to be too serious. CMG looks like it's going to be going to get taken down pretty soon. Yeah, CMG has just been a boring ride. I traded a lot last year, but CMG has just been... ever since it gapped up, it's really been at 450 since the summer. Really just been chilling. Yes, we had a run up to 530, back down to 400. Now we're just at 450. So we're in the we needed to break down lower 400s or higher 500 or lower 400s near 500 to really start trading it again. For me, I don't see a trade here until we can break out of this, and I think unfortunately we need a catalyst. And last year the catalyst was people getting sick, which I don't want to see. I don't want to see people get sick. But last year that was the catalyst that people were getting sick. This year they had some improved profits or revenue, whatever. That's why they went up from 337 all the way up to like 400 area. But it's been chilling at 450. And it looks like it could just stay there for a while. It's not really breaking down. Today it was down 3%, sure. CMG would be good for day trading today. But as you can see, like over the week, very choppy. So a lot of ways that you could have day traded this if you were trying to day trade. Definitely good day trading chart here. But if you're swing trading, like I mostly do, it's not really that interesting. Chase is going to have a brokerage platform. I tried to ask you yesterday with the stream over, where do you think of Chase getting into the stock game where they offer the first 100 trades are free, then you pay $2.95 after that? I wasn't aware of Chase having an offering like that. I don't know if anyone has a link, drop it below and we can go over it on the stream here. But first 100 trades, like I got better pricing on Tastyworks and I got better pricing on Thinkorswim or TD Ameritrade. I don't think well, it depends. Is it $2.95 per trade, or is it per $2.95 like per trade plus a contract fee? Got to get the details. Target. Oh, yeah. So they're back down. I'm glad I sold this stock when I bought it. I made like 20% on it. But yeah, we're back down. We're back down in the 60 area. Let's see where we're at here on the 2-year. Let's see here. So we're at 66. Really no support. I mean, it did have some support back in here, but it's looking really dangerous. The one thing that I will say about Target, it's a very slow mover. You have to have some patience with Target if you're trading it, but it does look very bearish right now. Kit does 20 to 30 trades a day, so for me it's a free week. 20 to 30 trades a day? Man, you're rolling, bro. You're rolling and adjusting. Let's see here. Chase brokerage. $2.95. Let's see here. Okay, we got something. We got something here. Okay, JP Morgan is launching an investing app for traders next week, and it's free. So they're looking to compete with Robinhood. Make up to 100 free trades per year. Let's see here. In the first year, all customers, including new customers who download the bank's app, will get 100 free trades of stocks. Doesn't say anything about options. Users can open an investing account in a minute, and the service will tutor them on how to invest with the bank's equity research on about 1,200 stocks. So it sounds like it's a very controlled kind of test. You're not going to have access to the full market. Yeah, the trading service may appeal to millennials. Like, honestly, they're trying to compete with Robinhood, and I mean, who wants to compete with Robinhood? You know, it's like, unless they're taking a lot of JP Morgan's business, but Robinhood's going to have some troubles here. So they're just trying. Basically, I think what they're trying to do is get millennials interested, kind of like Robinhood, get millennials interested in trading and then investing, and then level them up. But it mostly, I think it's just like for people that have no idea what the stock market is. Get them to buy stocks and then upgrade them to like a more sophisticated platform. It just sounds like a funnel, you know. You know, it's kind of like if you think about like Toyota's strategy. You know, they had the Scion brand for the younger people, and then they had the Toyota brand for like the middle age, and then they had the Lexus brand for, you know, the luxury, more older crowd that could afford it. You know, it's kind of like that. So I don't think it'd be something for me. Unless you want to buy some stocks for free, then that's fine. But it doesn't look like you could do a lot. Yeah, day trade mostly could see being pretty boring on the swing. Taking off, nice to finally catch a live stream with the channel. Appreciate you, Andrew. You've been here since day one, man. Thank you. Robinhood sucks. I just use it as a free second account because it's free. By the way, don't get sucked into Robinhood savings checking accounts. They don't deserve our hard-earned cash. Again, that's just my opinion. I agree with you. I agree with you, Kit. But if it isn't coinciding with my taste work fills, I'm not about to actually crazy occasionally get a better fill here and there. Yeah, depends on market moving. When the market moves a lot, you know, by the time you switch accounts, the price is most likely different. I did get a free stock by signing up with Webull. Not gonna lie, I sold that $4 stock and closed my account. I really like Robinhood until they changed clearinghouse. Yeah, I mean they've been having some troubles, man. William made some money in the Tilray put credit spread. Man, that took some guts on Tilray, man. I mean, I'm glad it paid off because the chart's not looking too good, and you probably just got out just in time. Had a nice rip up at open and then came back down, but you know, really close. I mean, it was down 0.5%, which for Tilray is nothing. Really ate those premiums up pretty good. So spread was the way to go. It just, I can't bring myself to do it because it moves too much, you know. I mean, those puts got crushed even in the money. Even in the money got down 12, 13, 50%. Yeah, and they're not that liquid. It's definitely hard to get in and get out. Wheat stock's been moving due to a farm bill legalizing hemp potentially federally. Yeah. But the wheat stocks are still very, I would say, this treacherous. Yeah, Robinhood had they changed to their own clearinghouse now. They were using someone else, and then now they changed to handle it themselves. So All right, guys. 5 minutes left on the chat. On the stream? Any last stocks you want to look at before we sign off and we have a weekend? Again, if the video is of value to you, hit the like button. Definitely appreciate you. If you weren't here in the beginning of our stream, we launched a Discord channel, our Discord group. Hit the link below if you want to join that. We also have our options trading group on Facebook. The link below is for that as well. While I wait for some of you guys to drop some tickers, last minute tickers. Kit, you're in Discord. You already got invited. Capital One. Tobin. Time to buy? I don't know, man. This looks bad. It's back to like almost 2017 lows. 2017 lows, $76. So, you know, I'd probably wait till we get to 76 before thinking about it and see if it's going to bounce or not. Try to close SPY on Robinhood. It stopped me due to password. All right, drip. Let's see here. I don't know if options really trade on here. Let's see. I don't really trade this because it was like mostly a penny stock. Yeah, I think we looked at this before. Drip's not very liquid here. Really no volume, but you know, so I would definitely prefer to trade USO over drip. But this looks, you know, we got the S&P oil ETF. I mean, it's just not that liquid. You would probably just be better off buying stock on this versus trading options, just because the liquidity, you know. Liquidity on options aren't very good, but it does look. I mean, it's near the height of its range here, so. Been a long time. Yeah, I used to FCA. I was trading Priceline a lot last year. This year it's not really. It's kind of hard to get in and out of it. I mean, it's a high price stock. It's nice to sell premiums in there, but it's definitely difficult to get out. And this year, I mean, if you're looking at the chart on this, I mean, it's a mess. It's terrible. It doesn't know which way it wants to go. Drip is not liquid. Sounds funny. Yeah, USO. William. Like I said, it's kind of the same thing. If we're above $50 a barrel on oil, I'm bullish on it. I have $12 strike calls for January, but right now it's really just consolidating. It's really put a pause on it. It really stopped the bleeding. So we'll see. Below $50 a barrel, I'm bearish. Above $50 a barrel, I'm still bullish. So currently, I'm still bullish on it. Yeah, you need that volume, man. You need that volume. Anyways, guys, you know, definitely it was great rocking with you. If you want to join our Discord group, the link's below. You guys have a great weekend. It's always us versus herd. We had a fun week. It was a great week. JCAMRN. All right, fine. One last one. Oh, I think Easy in our group always trades this, and you know it's tough, man. Goes from penny stock up to you know, the options aren't. Let's see here. Options are. I mean, it's kind of mixed. I can see the calls are. You know, you can definitely. There's almost 500 volume on some of these. There's 700 volume. Open interest is pretty large, so it doesn't look like you'll have a problem getting out of it. I would just be worried about the spread. I mean, this is a 45-cent, 89-cent spread on the puts, 20-cent spread on the calls. You know, you just got to be careful about this. That's technically something I don't trade, mainly because the spread is so crazy. So I'm new to certain stocks and all this information. Open up an account with Robinhood. Should I close it? You know, it's up to you. if you guys weren't here yesterday, I believe, or was it the day before? No, it was the day before. We have a video on the Robinhood issues and the people that couldn't get out of their positions and all that. So, you know, check that video out. Carmen, take it easy. So, all right. Signing off. You guys have a great weekend. Thanks so much.